Hello, everyone. Welcome to the BDO Financial Reporting Update webinar. My name is Elisa Noble, and I'm joined today by Grant Hasty. We are both from BDO's Technical Financial Reporting team. BDO is open for business as usual, but as you might expect, we're all working from home. So please do bear with us if any technical issues arise. There will be a recording of the webinar available through our website, so you can always listen to that at a later date if you do come across any problems today. Now, sorry, I just had some messages about some people might not be able to hear. I hope that works for you. Sometimes it helps to refresh the browser, for example. So today's webinar may take a little longer than usual because we have added in some additional content about the recent developments relating to the coronavirus outbreak. That will be the first topic we'll be covering today. If you do have any questions, you can, as usual, use the question and answer function. We'll see if we've got time to answer them. If not, we'll get back to you later, or you can always get in touch with your usual BDO contacts or the contact us functions through our website. So on the agenda today, as I mentioned, we'll be starting with the coronavirus. After that, a bit of an IFRS update, looking at some changes coming up on primary statements, as well as some additional comments about lease terms from the Interpretations Committee. For UK GAAP, we'll be looking at some recent amendments and the triennial review amendments. And we'll finish off with some narrative reporting relating to streamlined energy and carbon reporting requirements, Section 172 statements, and some final news items from the FRC and updates on Brexit. So let's start. As individuals and businesses, we have all been affected by the coronavirus pandemic or COVID-19. We'll probably use both of these terms for the purposes of this update. You'll all be well aware that the government, the Financial Reporting Council, and other regulatory bodies have issued a number of statements with guidance and certain reliefs in order to support businesses in the current circumstances. Many of these have financial reporting implications. So we've prepared for you a summary of some of the key points and considerations, and we will share BDO's guidance. This reflects information and our understanding as at today's date, the 2nd of April, though please do note that any update on these matters can quickly become out of date. The coronavirus has thrown financial reporting into turmoil, with market, regulatory, and legal expectations and requirements changing at speed. On 26th of March 2020, the FCA, the FRC, and the PRA issued an important joint regulator statement in which they indicated that in these extraordinary circumstances, previous market practices relating to the timing and content of financial information and the audit work that is done must change. Necessary changes are likely to include more modified audit opinions and material uncertainties related to going concern, changes to the timetables for publication of financial information, and the need for investors, lenders, and other users of financial statements to take into account these circumstances and accept the resulting delays in the provision of financial information, the need for auditors to undertake additional work, and the increased use of modified audit opinions. So it's clear the regulators expect companies and their advisors to carefully consider the conditions that we now find ourselves in, and to take the time necessary to ensure that corporate reporting, when it is published, is of the highest quality and greatest relevance possible. In order to allow this to take place, a number of legal and regulatory exemptions have been put in place, which we will summarize in the next slide. All companies can now apply to Companies House for a 3-month filing extension. AIM-listed companies can apply to AIM regulation through their nomads for temporary relaxations to certain AIM rule requirements, including a 3-month annual report filing extension, temporary share suspensions to allow for AIM notification obligations to be met, and a delay in cancellation of suspended shares. For companies listed on the main market of the London Stock Exchange, a series of temporary measures have also been announced. These include a moratorium on the publication of preliminary announcements, This is coming to an end on the 5th of April 2020. An extended six-month deadline for the publication of accounts. That's instead of the usual 4 months. Relaxations to the mandatory audit tender rules. You'd have to apply to the FRC for approval for that for up to 2 years. And a relaxation of audit partner rotation rules, which would need audit committee approval, but not the approval of the FRC. That can be extended from 5 to 7 years. Companies' annual reports will be significantly affected by the coronavirus. A lot of guidance has been released about the corporate reporting effects. The FRC has issued guidance several times, and most recently last week on the 26th of March. At that time, they highlighted some of the more important matters that companies must consider when preparing their annual reports for December 2019 year-ends and onwards. We also have 2 international financial reporting bulletins published by BDO Global on the financial reporting effects of the coronavirus separately for 31st December 2019 year-ends and on 2020 year-ends. We'll go through some of the key points in the next slide. Do note that the FRC's guidance addresses a number of other matters, including corporate governance considerations around internal controls and management information. So we do really recommend that you read the FRC guidance in full for yourself. In terms of impairment, a lot of people have been commenting on that as well. The IASB, ESMA, various prudential regulators, including the UK PRA, have commented on the application of the IFRS 9 expected credit loss model in the context of coronavirus. BDO Global is currently in the process of drafting some guidance on impairment reviews in the context of the coronavirus, and this guidance will cover the application of both IFRS 9 and IAS 36. So please look out for that coming up on our website. Looking at the implications in a little more detail, for December year-end, as at the 31st of December, the World Health Organization had not yet declared the coronavirus to be a global health emergency. That is something that happened on the 31st of January this year. So that means that it should be treated as a non-adjusting event for the purposes of impairments and other estimates at the balance sheet date, unless perhaps in a situation where the business had significant operations in the first affected regions of China. This is because these estimates should be based on reasonable and supportable information that was available at the balance sheet date. That doesn't mean, though, that there's nothing to consider in the accounts. So very importantly, the narrative reporting should always be as up-to-date as possible at the date the accounts are approved. So we'd expect the effects of the coronavirus to be clearly addressed in the strategic report. Many companies are including it as a principal risk, for example, due to the effects on supply chains, changing customer demands, and the effects on the workforce. Post-balance sheet event disclosure will need to be provided if there are any significant effects on the business. This could include, for example, expected future impairments, breaches of covenants, supply chain disruption, workforce disruption, trading disruption, etc. These disclosures should be as specific and quantified where possible, with any uncertainties highlighted. For going concern, entities do need to consider events that have occurred both before and after the balance sheet date when considering whether or not there's a material uncertainty over the ability of the company to continue as a going concern. Many companies are concluding that they do have such a material uncertainty as a result of these circumstances. The forecasts, expected compliance with covenants, and the availability of financing all need to factor in the estimated effects of the outbreak. We'll come back to going concern in a little while. In the financial statements, though the numbers in the primary statements will be largely unaffected, the effects of the coronavirus will need to be considered when drafting some of the more forward-looking disclosures. So, for example, your disclosures about the significant accounting estimates and judgments, these should be very, very clear in terms of the basis that has been used so that readers can understand the changes post-year end. So for example, if sensitivity analysis, that would be really helpful and important to explain the basis on which it has been put together. Similarly, for financial instruments, risk disclosures about credit market and liquidity risk. Okay, so what happens when we get to 2020 year ends? In this case, for the narrative reporting, forward-looking disclosures and going concern, all of this is the same as for December year ends. It should reflect the latest information. Additionally, though, impairment tests and other accounting estimates will also need to start to consider the effects of the virus from 31st of January onwards. So for anyone with a January, February, or March year end, you'll need to consider what the effect of the virus was at the balance sheet date. Though do remember that everything in the balance sheet should be classified and measured using information that was reasonable and supportable at the balance sheet date. And so, for example, for a January year end, we need to be quite careful not to apply hindsight in terms of matters that might have happened at the end of March. So what effects will we see in the balance sheet? You'll need to very carefully work through impairment tests. There will certainly be indicators of impairment. IFRS reporters will need to consider expected credit losses. You may be renegotiating your debts or have covenant breaches, all of which have accounting implications. You may have onerous contracts to record. Your deferred tax assets might no longer be recoverable. Lease terms, in terms of the length of the lease term under IFRS 16 could change. You might be reversing revenue under IFRS 15 if your variable consideration estimates change. So there's a lot to think about, and this is going to be quite a task for many companies. In the guidance the FRC provided last week, they set out their high-level expectations in respect of financial statements, covering the areas in the boxes on the screen. We've already mentioned most of these areas, but as a general message, the FRC expects all disclosures about the effects of the coronavirus to be entity-specific and for the key assumptions and judgments to be made very clear and for the sensitivity of estimates to be clearly disclosed. So those are some of the overall messages that would apply to different parts of the accounting. On dividends and capital maintenance, the FRC reminded companies that where they have proposed but not yet made a dividend, so perhaps a dividend that's been declared but not yet paid, directors need to consider the position of the company when the dividend was proposed, but also when it is made. And if the company is no longer able to pay that dividend, then the directors should halt any such dividend payments and communicate appropriately to the market. Also from the FRC, in this case, the FRC's Financial Reporting Lab, what they've done is put together a really useful infographic, which we suggest you take a closer look at. So I'm not sure if you can see the details on the screen there. But what they've done is come up with 5 current questions which investors are seeking information on in reviewing accounts of companies to understand the effects of the coronavirus. So take a look at those questions, and there's some more detailed bullet points below them. You can access that through the FRC's website. The key message is cash is really, really important, and this is all about disclosing information about a company's liquidity, viability, and solvency. That leads us on to going concern, because clearly many of those disclosures would be relevant to a going concern assessment. Now, assessing going concern at the moment is really difficult. Why is that? Because existing projections are likely to be unrealistic, and it's very difficult or impossible for many companies to actually adjust those forecasts, because it's almost impossible to come up with supportable assumptions about the effect that the coronavirus outbreak will have on your forecast cash flows. None of us know how long the situation and the problems are going to last. So a different approach to going concern might be necessary. Your auditors would expect the company to lead on this, to perform the going concern assessment, you may need to start from scratch. It's often helpful or it makes sense to not start with those existing forecasts, but to start again and consider what is it that could break the company. That means if things go wrong, at what point does the entity run into serious difficulties, and what can and what is being done by the company to mitigate that. So this would then give you a good basis to arrive at your conclusions about material uncertainties and for the disclosures throughout the annual report. There are 3 areas to make sure you've covered. Operational capacity, that's things like can you continue your business, how's your workforce, what's happening with the supply chain, market demand and its effects on revenue, and financing issues in terms of availability of loans, capital maintenance. Note that even companies who currently are at their balance sheet date have a lot of cash may still come across problems. All of the disclosures about going concern should be consistent throughout the annual report, so in the notes to the financial statements, the strategic report, and your risks disclosures. So those are the key messages we had about the financial reporting effects of the coronavirus. It's important for everyone to refer to the original source information. So we've got a number of websites on the screen there which have relevant and really useful information. Now, we've talked about financial reporting today, but there have been many other regulatory changes too. For example, various tax and business support related reliefs and measures. Also changes to the insolvency laws in relation to wrongful trading, and even updated guidance on holding AGMs in this situation. So BDO's website has a COVID-19 hub with lots of guidance on a range of topics. Some of you may have listened to a webinar earlier this week on the 31st of March called Managing Cash Flow. If not, if you didn't listen, a recording is available through our website, and that explains a lot of these broader support measures in place for businesses and individuals.